What if every dollar you earn could quietly work for you, even while you sleep? In 2025, when inflation eats away at savings and the cost of living keeps climbing, investing isn't just an option, it's survival. The wealthy don't rely on luck. They rely on systems, habits that make money flow toward them, not away from them. Today, we'll break down how you can grow wealth step by step, even if you're starting small, using simple, repeatable systems that anyone can apply. 1. The foundation: mindset and budgeting. Before we talk about investing, we need to talk about mindset, because wealth doesn't start with money, it starts with intention. Most people work to earn, spend, and repeat. But investors, they work to earn, save, and redirect their money toward growth. The process begins with budgeting, not as a restriction, but as a roadmap. Track where every dollar goes. Cut what doesn't add long-term value. Cancel unused subscriptions. Eat at home when you can. Each time you make that small, conscious choice to save, you're planting the seed of future freedom. But don't stop there. Every dollar you save should have a job, and its job is to grow. 2. Using your savings as fuel. The truth is simple. Savings alone won't make you rich. A savings account is like parking your money in neutral. It's safe, but it's not going anywhere. Your goal is to shift your money into drive by investing it into assets that create returns. Even if it's just $50 a month, consistency beats size. The earlier you start, the longer your money compounds. Think of it this way. Every dollar that you don't waste today is a small employee you send out to work for you tomorrow. 3. Tax-advantaged accounts, the secret weapon. Here's something the wealthy understand deeply. Taxes are your biggest hidden expense. That's why they invest through tax-advantaged accounts, legal, powerful systems that allow your money to grow faster. Start with your 401k, a pre-tax account where every contribution reduces your taxable income today. Then, look at a Roth IRA, where your money grows tax-free forever. If you're self-employed, explore a SEP IRA or solo 401k. And don't overlook your HSA, health savings account. It's one of the only accounts with triple tax advantages: tax-deductible contributions, tax-free growth, tax-free withdrawals for medical expenses. The key? Automate your contributions to these accounts. Don't leave free money on the table. 4. Make your money work, investing in assets that grow. Once you're saving and using the right accounts, it's time to make your money work for you. The goal is simple. Invest in assets that hold value and generate returns. Stocks, index funds, ETFs. These are the engines of long-term wealth. Real estate, whether through direct ownership or fractional platforms, adds stability and cash flow. And for the digital age, there are new opportunities: AI-based businesses, digital product royalties, dividend-yielding crypto or DeFi platforms. But here's the rule: never invest in something you don't understand. Chasing hype is how people lose money. Understanding is how they grow it. 5. Diversification. Don't bet everything on one card. One of the biggest mistakes new investors make: putting all their money into one place, one stock, one crypto, one dream business. Diversification isn't exciting, but it's how you stay wealthy. Split your portfolio, some in low-risk index funds, some in dividend stocks, some in real estate, a small portion in high-risk, high-reward assets like startups or crypto. The goal isn't to beat the market, it's to protect your future. If one asset crashes, the others keep you afloat. 6. Automation, building the wealth machine. The wealthiest people aren't smarter, they're just more consistent. They automate the process. Set up automatic transfers. A portion of every paycheck goes into savings, another into your investment account, and another into your emergency fund. Then automate your investments. Most brokerages allow recurring buys, weekly or monthly purchases of ETFs or funds. This turns time and consistency into your silent partners. And when those investments pay dividends or gains, reinvest them automatically. That's how compound interest becomes a machine, your money earning money, endlessly looping back into itself. 7. Patience, consistency, and compounding. Here's the secret they don't tell you on social media. Wealth isn't fast. Compounding takes time, but once it accelerates, it's unstoppable. Imagine planting a tree. For the first few years, nothing happens. Then suddenly, it grows exponentially. That's what happens when your money compounds year after year. The hardest part is staying consistent, especially when markets fall. But every downturn is a sale on your future wealth. Keep buying, keep holding. Time, not timing, is what builds fortunes. 8. The 2025 reality, adapting to change. The world in 2025 moves fast. AI is replacing jobs, inflation reshapes value, and traditional banking feels outdated. But the rules of wealth haven't changed, just the tools. Instead of fearing automation, leverage it. Use AI budgeting apps. Use robo-advisors. Use platforms that automate investing for you. Learn how money moves in this new economy, because those who adapt early build faster. Passive income now isn't a fantasy. It's the future for those who take the time to learn the system. 9. Final thoughts. The long game. Remember this: getting rich quick is luck. Staying wealthy forever is discipline. Don't chase every new trend. Build habits, build systems, automate your money, diversify your investments. Let time do the heavy lifting, because when your money starts working harder than you do, that's when true freedom begins. If you found this helpful, hit like, share this with a friend, and subscribe to Finance Simplified channel for more smart money tips. Because the best investment you'll ever make is in yourself.